Hello traders, Gary Wagner here. It is 1:14 in Honolulu, 6:14 in New York on Monday, 7th day of February, 2022, and this is the Daily Report for gold and silver. Very respectable gains in both gold and silver today, with gold gaining about 0.75%. That is a rise of $13.40, with the most active April contract currently fixed at $1,821.20. That came concurrently with minor dollar weakness, only 0.08%. So the vast majority of today's gains were definitely traders actively buying gold. Silver had significant gains, 2.45%. In fact, that's a 55-cent rise, taking silver once again over $23. $23, 2.5 cents is the current fixed price for the March contract. This first chart is a daily candlestick chart, and in this chart I have included three primary moving averages. The one on top, the dashed green line, is a 50-day. 200-day is a solid red line. Dashed blue line is a 100-day. What is interesting is if we look at last week, the market actually opened below 1,800, and then we saw it move up consistently throughout the week, with really only one day having it close lower. And today, we had an open that was above the 200-day, and we had a substantial increase. Our target right now still has to be these highs that come in at about $1,855, but we have to see what data the Bureau of Economic Analysis comes out with when they release their CPI report for last month on Thursday. Currently, the estimates are that it will increase yet again. It came in at 7% last month. The expectations are 7.3%. Of course, higher inflationary pressures is extremely bullish for gold, but at the same time, the higher inflation goes, the more likely it is for the Federal Reserve to become much more aggressive in terms of the interest rate hikes. Currently, the expectation is that the interest rate hike we'll see in March will amount to 0.25%. However, according to the Fed Watch tool by the CME, there is a 25% probability that the Fed will actually implement a rate hike of 0.5% and announce that at the conclusion of the March FOMC. To our current active trade, we are long both spot gold as well as gold futures, but I will reference gold futures. We entered our long trade on Thursday. Our fill price came in at right around $1,790. Of course, we had been waiting throughout the week as we saw gold rise, attempting to buy the dips. We did get the dip we needed on Thursday. We had a small gain on Friday, and then this respectable gain today of about $14. This references the open in Australia. Now, originally, we had set our stop price at $17.72. And that is where it is currently sitting. However, it is time to trail our stops higher. So we will send out a trade alert before the open of New York markets tomorrow with a new price to place your stop at. This is also a daily chart of gold futures. This does have our compression triangle along with our Elliott wave count. And basically, we are anticipating the market to continue to move higher, although it is tracked right along this A line. Realize that this was just drawn in with me, and it's not a proper reflection of pricing. On tomorrow's show, we're going to take a look at the Fibonacci retracement from this last correction when the market traded at around 1850 and then broke below 1800 to fix what we think might be a more appropriate price where we could see this terminate and move into a corrective B wave. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.